Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. I'm excited to be streaming to you guys today. I've been wanting to log on over the last few days, but just simply have not had the time to do it. Right, and by the time I'm finished with this stream, it'll probably be around 8:30 or so p.m., and I still haven't even eaten dinner yet this evening. So just to let you guys know that you are above my priority of eating as of today. So I was wanting to do everything I could to put a stream together, and if that meant eating dinner a little bit later, then that's quite okay. But for the most part, I will be definitely trying to stream earlier than this, and today got caught up with a few things, so it is wasn't able to get to it till now, and I am glad that I'm able to go ahead and bring you guys the most up-to-date analysis that I have, because the markets have been moving. There definitely have been some developments that I would like to talk about, so we'll be getting right into that. First, I did want to take some time to go over the strategy tester for the EMASAR indicator. This is something that was touched on briefly in the last episode and ran into an issue with the strategy tester that was published. It got hidden by the moderators, basically taken down, so it was unavailable to anybody except for myself. And so I did want to make sure to clarify anybody that has been trying to use that over the last few days. It hasn't been available, and I do apologize for that. I had to end up republishing with a new description. They didn't allow me to link from the strategy tester to the actual strategy, which was wild to me. Not explicitly written in the house rules, and but was a reason for them to go ahead and take down that script. So now it is available, and I do want to take some time just to show you guys how it can be found, and then also how to use it real quickly. So after I'm finished with that, I will be diving right into the charts to, like I said, give you guys my most up-to-date analysis. So basically, if we come over to my profile, you can find my profile by searching where it says ticker, select people, type in my name, and click on that. That will bring you to my profile where you can see my recent posts. I haven't posted any charts in a while, but instead of ideas, just click over to scripts, and then you will see the scripts that have been posted. And most recent one is EMASAR Strategy Tester. You see this one is in red because it was taken down, and then this is the actual indicator itself. It was unfortunate that got taken down. I was getting a lot of good response in a very short amount of time. I already had 32 thumbs up, so I was excited about that and bummed to see that it did get taken down. So big favor to ask anybody who's out there, if you could come in and provide any comments or likes to the new post that's available. That would definitely mean a lot to me, and I would appreciate that. So basically, you can click on that. Let's see. And this, again, will show all of the signals, except for in the last 30 days. The last 30 days will be kept private, but this will allow you to backtest the history of different markets very, very quickly and easily, and even different time frames and all that good stuff. And it'll just keep away the most recent signals. So new description has been written here, and if you do come down, you'll get the strategy test for the Bitcoin 4-hour chart, where it'll basically show you like net profit, number of trades, percent profitable. You can come over to performance summary and get all this. So that was, and then also the list of trades will show you every entry that is being used to determine the data that is provided under here, under max drawdown, net profit, and all that sort of good stuff. So I do want to make sure everybody is aware how you can use that to test different markets. So let's just say that we want to see how it's performing on Ethereum. What we would do is just go to our chart and pull up an Ethereum chart. Put it on the time frame that you're wanting to test. I am strongly recommending the 4-hour. It's not the only one. It's profitable, but it is the only time frame that I've used it on. to actually trade myself. So when I do see that there is some other time frames that are beating the market, you know, it's just something that I haven't actually used in real time. So I'm for the most part only going to be using the 4-hour, but that doesn't mean it's necessarily the only thing it can be used on. So you can use this strategy tester to get a feel for basically what markets and what time frames you think work best. So you just like you're pulling up any other indicator, so you want to pull up the RSI or anything else, you click on indicator and then search, and you would see EMASAR Strategy Tester. The indicator itself is locked and isn't public, but the strategy tester is. And that is something that I wanted to touch on very quickly, is I have been getting some feedback just in terms of a lot of people asking for a free trial or pointing out that they feel like $500 a year is a hefty price tag. So I just want to respond to that really quickly, and the answer is no, I'm not going to be providing any free trial. The trial is, for the most part, going to be this strategy tester. It is going to allow you to come in and test this over a long period. It won't allow you to actually implement trades in real time, but something that's very important to keep in mind is that this system is only going to signal on average 1 trade every 6 weeks. So if you are, you know, looking for a couple month trial, that's just not going to be sufficient. And anybody that has gone ahead and buy, I do want you to understand that this is something that it takes some time to really get in some volume. If we're only getting 1 signal every 6 weeks, then that means it could be, that's on average. It could take months before a signal even comes through. And as a matter of fact, the less signals we get, the better, because that means we're entering in before a trend and holding on for the duration. If we're getting multiple signals within a few weeks, those are going to be the bad signals when we're in an area of chop. And therefore, we really, you know, want there to not be many signals. That's great, but it's not great for like providing a free trial, because that's not going to allow, like, maybe you do get the 1 good signal in 6 weeks, but then you don't have it when it's time to exit. So it would really have to be, you know, a very long-term trial, and that's just something that I'm not really interested in dealing with, all of the back-end administration work that would go into that. So anybody that is, you know, kind of on the fence, thinking this is a little expensive or whatnot, definitely, you know, come in and get familiar with the back testing results and get a feel for, okay, am I going to be able to, if I spend $500 on this indicator, am I going to be able to get more than that back through using it to trade? And that's where I think that $500 a year is actually a very, very reasonable price point, because if this thing is working for you and you are able to beat a market like Bitcoin or Ethereum and potentially even beat it by a wide margin, like we see here with Ethereum, then you should really be able to make a lot more than $500 a year. You'd only have to be trading like $1,000 or $2,000 account to be able to make $500 a year. And this isn't for somebody that's just really, you know, experimenting with a smaller account. If you've only got a $1,000 account, absolutely do not buy this. It's not going to be worth it to spend half your roll on an indicator. You know, whereas if you're trading thousands or tens of thousands or even hundreds of thousands of dollars, then if you're able to use this to improve your results, you should be seeing a much bigger impact to your bottom line than 500. It could be thousands, it could be tens of thousands. And in that case, 500 will be well worth the price point. And if you're not able to use this to beat the market, as I outlined in the last video, it's very difficult to do that with any indicator. Well, then, you know, you're probably just not going to renew it, and you know, no big deal. It's not like you're locked in for reoccurring, you know, yearly payments. So I did just want to respond to that really quickly and show how to use this strategy tester. You do just pull it up on the chart as if it was an indicator, and then you come down here. I've moved this up. This will be at the bottom. Come down here, click on strategy tester. And then you'll have all the things that we had on the other market. We will see that the percent profitable, this is something I didn't really touch on the last trade. This is a very, very important metric. We saw this on Bitcoin. Now we're seeing it on Ethereum, where over 60% of the trades are profitable. And that's something that may not, you know, isn't necessarily in and of itself that impressive, but it is when you compare it to the risk to reward. In general, if you have more than a 60% strike rate, your risk reward generally isn't going to be that good. Maybe if you have like a 2-to-1 risk reward, you'll be looking at maybe a 60% strike rate. This is something that's very much a give and a take, where the better your risk reward is, generally the worse your strike rate is going to be, and vice versa. The better that your strike rate is, generally the worse your risk reward is going to be. So this is actually one of the things that excites me most about this indicator, is an average risk reward of about 5.55 to 1. And a strike rate that is above 60%. I mean, I've personally just never seen an indicator that has an average risk reward above 5 and a strike rate above 60%. That's can be really powerful. So something that I did want to touch on there. So take a look, under performance summary, of course, we're comparing net profit to buy and hold return. And when we're doing that, it is important to compound the gains. And to make sure that that is the case, we have to come into EMASAR strategy, click this settings icon next to it, come over to properties and set order size to 100% of equity. I believe that that's how this is set up by default, but most of the other strategy testers on TradingView are not. They're set up as just the same number of contracts or the same amount of USD. Whereas for me, if we're making 10% on a trade, then we should be including that into our roll for following trades. So that's why I think it's very important to use 100% of equity when doing a back test. So this is now available for anybody that is wanting a free trial. I think this is the best way, the best option that is available, where you can come in and see what are the results across various markets across a significant time period. It's not going to be as good as like a year free trial where you can come in and actually put it to work in real time. And that's also why, even if you are completely sold and confident, you need to be managing risk and not, starting out small and proving to yourself in a live environment that this is working before actually putting a, very significant amount of money to the test. So these are all important things that I want to touch on. Probably not why people are tuning in today for the most part, but did feel it necessary to go ahead and go over that before getting into the charts here. So, okay, I will quickly see if there's any questions, and then we will get into the price analysis. One thing to mention real quickly is I still haven't established the Telegram group. I was really hoping to get to it today. Wasn't able to happen. I definitely think that I'm going to be able to get to it tomorrow. It's at the top of my priority list, and I feel like there's nothing really that should get in my way. You never really know, but we'll be doing everything that I can to get that established tomorrow. We've already got a very good group of guys. I'm really excited about the Telegram group, really as much as anything else. I think that it's going to be a really, really great spot to share ideas and to learn from other people, and also to build some camaraderie and some relationships. So I did want to just update on that. Anybody who's waiting, it should be coming through soon. Okay. All right, I got a couple of comments. Good to see Fibbo Swanee in the chat. Let's see, Fiat, we'll say Watts. He says, happy member and buyer of the indicator. Very, very glad to hear it. Let's see here. God's Cop says 500 years, like 1.35 a day, cheaper than one beer a day. That's a good way to look at it. I hadn't thought about it like that. Let's see here. Anything else? Stuff your face with potato chips during the stream for all I care. I appreciate it, but I'm not sure if anybody else would feel the same way about me munching down on a bunch of potato chips. So, all right, great to see everybody here, and we'll go ahead and dive right into what I've been looking at. I have shared one chart over the last few days with anybody that I talk to on a consistent basis on Telegram, and that is what the most important pattern or market structure, however you want to phrase it, for me, for a while now, has been this parallel channel. And I have been expecting us to find a good amount of support around the bottom of this channel. This has been a long-term market structure going on 4 months now that we have been fitting in this pattern, and now we are oversold by a lot of metrics and at the bottom of the channel. I was expecting a return to the bottom of this channel. That has happened, and now the most likely way for us to proceed would be a bounce to at least retest the median. And we do see that if we retest the median, that would be at an area where there would be some horizontal potential resistance waiting that was support in the past. So let's see here. So if we are able to bounce from here to retest the median of that channel, I wouldn't be feeling too confident that we're going to get any higher. Like, generally, there's a few options in these parallel channels. It's like either you're going to, well, there's, I would say in my mind, 1, 2, 3 options. We'll say 4 options. Okay, so first option, when you test a boundary, either the top or the bottom, is to return to the median. And then from there, anything can happen. If we're able to break through the median, then we would expect it to return to the top. So that would be number 2. 1 is to the median, and potentially that median turns into resistance, and we come back down to test the bottom. If it doesn't turn into resistance, then you expect it to keep rallying up to retest the top. And so there's 2 things that can happen. A third that can happen is one that we recently saw in lower time frames, where if you actually break through the bottom of a bear channel, then you really look for the move to accelerate down. Vice versa for the top of a bull channel. Let's see if we can find one back here. If not, I think I do know where we could. So this wasn't really much of a channel, being that we only have a couple touch points, but once we have this breakthrough here and then a higher low put in, I would absolutely be using that to draw in a parallel channel. And then instead of finding resistance at the top of it, we broke right through, and look how we threw back to retest that for support before taking off again. Let's take it back to 2017. We had a parallel channel here, and this is basically, before learning hyperwave, this was my number 1 indicator to tell me that a market's getting ready to go parabolic. If we are in a bull channel and we break through the top of that channel, well, that just tells you the linear move isn't enough, and you're going to need more of a parabolic move. So here we see that we definitely had a parallel channel. We broke through the top and boom. So I'm not saying this to scare anybody, because I don't think we're going to break through the bottom of this. I really don't. But that is one of the 3 options. And then one of the other options is that it just basically comes back to the top and breaks through the top and reverses the downtrend. So those are the things in my mind of what I've been thinking about. Definitely expecting this to find support here. If it doesn't, it could get a little scary. We really don't want this thing accelerating to the downside any more than it is. I mean, I am short, and I would be happy about my position, but I'd be starting to get to worry a little bit about what would happen if we actually did break down the bottom of this channel. Again, I don't think it's going to happen, but that is the third. I'd give it like 10-15%. Moving to the median, I would give 15%. Moving to the top, I would say 30-35%. So that's my projection there. And then let's just look at a lower time frame and walk through, because we had a really good example of what I was just showing recently. Okay, so we were in this bearish channel using the 1 hour for a while, and see here, we found support at the bottom. We come to the median, it resists, and then it ends up breaking down the bottom of this channel. This was around when I did one of the last streams, maybe 2 streams ago, was looking at this thing breaking down to the downside and saying that basically if it doesn't happen, we should get a sharp reaction to the upside. But if we do start breaking down, I think I specifically said this low here, you'll have to go back and double check me, that it's really going to start to look like we're ready to accelerate to the downside. And just like we looked at in 2017 Bitcoin to the upside, that's a strong indicator to me that we're ready to make a parabolic move. Well, those can happen to the upside or the downside. And that's basically what's been happening to the downside as of late. So let's get the curve pulled up and see if we can draw it in. And that's lining up pretty nicely. It could be drawn a couple different ways. You could say that it broke it already. That's the one thing I don't like about these parabolas, is they're so much more subjective, at least to me, than just a straight trend line. Like, for example, I'm probably going to say that that's the best way to draw it, but I've been fooled too many times to have any sort of confidence in saying that this downside parabola has been broken. So I would probably, just to be safe, would be drawing it in like this. So this is a just basically a microcosm to the other side of what we saw in Bitcoin in 2017. Broke a channel to the upside, went parabolic to the upside. This one broke a parallel channel to the downside and has been developing a parabola to the downside. Now, parabolas are not sustainable. It's not like a sustainable market trajectory. Linear moves are sustainable. Parabolas are not. So when I see like a parabola to the downside, it doesn't make me think that this is a sustainable trend. It makes me think we're starting to get oversold and we're starting to capitulate, and that actually we should be starting to look for a bottom. That is my opinion. If you have a different opinion, more power to you. But so yeah, this is something that maybe looks really bearish, but to me it's actually indicates that we are strongly oversold, that people were kind of panic selling in here, and that once this breaks, we could really get a significant reaction to the upside. If you break a parabola, a bullish parabola, it calls for an 80% retracement. I'm not sure, I've never seen anywhere if that rule is still holds true for these downside parabolas. If we could draw in a fib retracement, let's say the move started here. So expecting if this parabola breaks, an 80% retracement would be back to 86.21, which would be very interesting. But I'm not, like I said, I really don't know if that same thing, you would think that it holds true if the pattern is just inverse, that the same thing would be true to the other side. Never seen that, and it might be true, but there's some reasons why I don't think that 86 would be a good target to have in here. And I am seeing this as looking pretty darn bottomy to me, but potentially only for the short to medium term. So let's see specifically what I'm looking at. Why this looks bottomy to me is what I just kind of told you, where once the market breaks down the downside of a bear channel and really starts accelerating, that's where people start panicking, and that's where bottoms are found. This action right here very much looks bottomy to me, where we sold off hard, we consolidated. Probably a lot of people bought in here and used this swing low as their stop. Market moves down to take out those stops, and this is right where you'd expect the move to accelerate, because stops are getting taken out, selling pressure from that, selling pressure from people who are viewing this as a sell signal, taking out the recent low. And then also sell pressure from the guys who are like either capitulating. This doesn't look like capitulation, but people who are getting scared and are like just really worried about another leg down like this. When you have this action right here where it takes out these lows and then fails to accelerate and instead gets a reaction to the upside, that's very bottomy to me. Not much different, but still similar than what we saw back in here. Because back in here, we took out the lows and then we really did kind of go down for a bit. It's not like we just took them out briefly and immediately reversed. Here, we really took them out by a pretty wide margin and closed all the way down here. But it's the same principle, where this really wiped out a lot of stops, and then for one reason or another, the market failed to accelerate when a lot of people would have expected it to do so, and then you get a sharp bounce to the upside. So here, seeing that we took out these lows and then reversed very quickly afterwards, has me very much keeping an eye out for an inverse head and shoulders. And these are one of my favorite reversal patterns. Let's see here. Where's my drawing tool? So potentially right here would be the left shoulder. Beautiful head. This is just what you want to see, like a V sort of bottom, like this V move right here. So from here, what we'll be watching for is support above, we'll call it 70.50, to give us a inverse head, shoulder, shoulder. If that happens, then I would be viewing a break of the neckline as pretty much in confluence with a break of that downside parabola, and that would really lead me to believe that we're ready to at least go back up to like the 8200 area or so. And we can check, why would I say 82? And hopefully I'm remembering that correctly. So I still would be looking basically at that trend line, and then also some horizontals. Let's see if it's best viewed on the weekly or a shorter time frame. Maybe 79. Maybe this would be the better area. 78 to about 82 would make. And then maybe we can even use the weekly to kind of adjust this out a little bit. Always trust trend lines on the higher time frames more than on the lower time frames. So that's what I'll be looking for, and that is pretty much what I'm expecting. I have started to take some profit on shorts, and I can quickly show you where and why. So right here really looked like a bottom to me, at least a local bottom. We looked pretty oversold. We had a 9 on the 4-hour, and most importantly, this Dragonfly Doji. So once that confirmed, right about in here, I went ahead and took some profit, about 20% of my position. And now I'm thinking about a little bit more, but I don't want to do too much. Like another 15% is kind of what I'm thinking if we do start to get some confirmation above 73. 73 is an important number. We do see that price has really resisted getting above that, and that would make up the neckline for the potential inverse head and shoulders. Not there yet, but that 73 is an important figure. And that's where I was taking a little profit, and why. Did send a tweet out around that time for anybody who wanted to know what I was thinking while I was not able to put together a video. So there is one very bullish thing that I can show that is very interesting, as a matter of fact. And this is like one of the only, like I'm feeling like not too confident. I do feel like this is just a local bottom and it's probably going to lead to another local high, but I'm not too confident in that. This very well may be the bottom. I was looking for a return to the mid sixes and we got it. It didn't last long, and that's bullish. So as price was falling down into the sixes, I was really interested in looking for bottoming patterns basically, or reversals from some of the other indicators. And this is a potential very strong bottoming pattern. Let's see. This is most commonly known as a broadening bottom, where you get lower lows with higher highs and lower lows. So if we do, and this would be where if this thing can regain 8,500, then it would really look like it's going to come up to the top of this, to me anyways. Too soon to say that, but it is interesting that we do appear to be finding support at the bottom of this pattern. And this is something that Tyler Jenks developed his own system based around these patterns. It is called Selgin, which is a abbreviation of the person he invented it with, whose name was, his last name was Self, and then so Sel for self and Jen for Jenks. Selgin system is something that I helped with the webinar on that, and it is something I haven't focused on really trading it heavily, because it's not like most other indicators where you can just sit down and trade the damn thing. You actually got to wait for these things to appear, and that is not the most common thing to happen. But when it does, it's time to pay close attention. And basically for Tyler, what he would do is look for a low between a higher low and a higher low, and then once that high got taken out right here, that's the buy signal, and then he had a trailing stop loss system. And then you would get like right here a high, nope, it'd be right here, high between a lower high and a lower high, and look for this bottom to get taken out. Now that signals a trade to the downside, and it looks like that trailing stop would be very much in play right now. So that is something that is still available. I don't have anything to do with it anymore. I do believe they're available on Tone site if you are interested in learning more about the Selgin system. That was just a brief breakdown of how to identify the entries. You have to get a lower low before. You don't look for this high between two lower highs until you take out this high. Same goes for this, until you take out this low. So this is actually a Selgin prime because there's 7 points instead of 5, which makes it that much more powerful. So definitely something that I'm going to be keeping an eye on, and a long entry would be signaled on that system if this current candle doesn't take out this low and it is able to take out this high. Then you would wait for that high of this candle to get taken out, and that would signal the long based on Selgin. So that very much does look like a broadening bottom to me, and this is the area where things get really interesting for that pattern. So that is the one bullish perspective that I can provide. The counter to that is, well, we just got a death cross. So on the daily 50 and 200 EMAs, we did recently get a death cross with the 50 crossing below the 200, and that is not good. I mean, there's no way to say that that's bullish. There is an argument to be made that these moving averages are late to the party, which is actually why I don't use them. Like, for example, look at what happened during this death cross in 2018. Didn't come until the price was all the way down at 7,000, which is kind of similar here. You already get a big move down before those are able to react. And then once it does cross, well, it's like at the bottom, right? But that's only the local bottom. It continues to go way down from there. So this cross, maybe it's late to the party and maybe it's happening at the bottom, but if so, is it just the local bottom? Is it going to lead to a prolonged bear market? It's definitely not bullish, and it's a reason to be definitely concerned. Specifically, I talked about up at the top of the hour how, I guess it was the bottom of the hour, how I didn't want to see the bottom of this parallel channel get broken down, because if that happens, then after this death cross, and while we're still in kind of a parabolic downward trajectory, well, I don't think that would lead to a small move, and that would be scary. Like, I don't want that to happen, but I don't let what I want muddle my analysis, or at least I try my best. I'm sure everybody does to some degree, but I try my best not to let what I want muddle my analysis. If this does break down this bottom trend line, and I don't want it to, well, I'm not gonna, it doesn't matter what I want, it matters what's actually happening. So definitely hoping that this thing finds support in here, and it would be great for this to be a broadening bottom and for it to take off from here. It's a good time for it to do so. It's a good place for it to do so. So yeah, I would love for this thing to take off, even though I am still in 80% of my short position. This is where things start getting hairy. I mean, I am really interested in building a long position around this 6,300 area, or even up to 67 if we were there longer. I was sleeping while we were there last night, but if we were there for a little while, I'm very interested in longing at that price. But it becomes far less interesting if it happens after breaking down the bottom of this channel. What I'd much prefer from a bullish perspective is, we'll say, something like this. That would be real nice, and it would likely come with a divergence on the RSI. If this happened and we go like this, I would bet money that there would be a divergence on the RSI, and this would be a sweet setup where if you were at the bottom of the channel, you were at horizontal support and on an RSI divergence. Well, sign me up for that. But there's only one way that really happens. Now, two ways. One would be resisting the bottom of the channel. The other would be going to the top and then maybe getting like some sort of capitulated move to the bottom. That'd be nice too. So either one of these would provide very interesting long opportunities. If it just keeps going down from here and does one of these instead, I may be starting to get very worried. But I would be in a significant short position still, so my worry would be curtailed with the profit that would be building up. So that's one thing that I've said before that I don't know if I've ever said on this channel, but I'm a big fan of shorting Bitcoin. I love shorting Bitcoin because it's kind of a win-win. If price goes down, then I'm stoked. So I'm like euphoric. I'm feeling as happy as I am when I'm long and it's up, basically. And if it doesn't go down and it goes against me, well, great. My HODL's increasing in its value, and I'm sure I'm going to get a long signal soon, and life is good. So it's kind of I've called it a happiness hedge. When I'm short Bitcoin, my happiness is hedged. If we go down and we dump, well, I'm happy. If we go up, well, I'm happy. So that's not the case though when I'm long. If I'm long and we go down, well, now there's nothing to be happy about. So just a quick tidbit about why I definitely enjoy shorting Bitcoin and consider it a happiness hedge. Okay. So yeah, what's more important here, the broadening bottom or the death cross? I'd probably say the broadening bottom, because the death cross is such a lagging indicator on Bitcoin that I tend to not care much about it. It is like kind of the final confirmation of a bear market, so I mean, it's bad. But there are a lot of reasons to believe, specifically the upcoming halving, that we are nearing the bottom of what I've been calling, this a lot of people have been saying this is this whole thing has been a bear market, and that is just based around how you trade. If you trade the weekly chart, then you could easily say this is just a lower high from here, and we've been in a bear market the whole time. Whereas I'm a swing trader, so I've been more, I consider this a bull market basically as soon as we broke through 6,000, which I wasn't expecting. But once that happened, okay, now we're in a bull market. And then I've been considering this a bear market since up around in here, because all of my trend trading, my favorite trend following strategies, trend identifying tools, all said bearish. 4-hour moving averages, weekly parabolic SAR, and daily Ichimoku cloud all turned bearish up in here, and we had a descending triangle. So for me, this was bull trend. Now we're in a bear trend, and this is a very logical place for this bear trend to find a bottom, somewhere in here. And it's almost not only logical but important, because if we start to give up too much of those returns, then we could be in a bit of trouble. The last defense for me would be using some sort of trend line like this, and seeing the 200-week EMA right in here. Yeah, that would be the last line of defense. I don't want to test it. I more want to find support from the prices that we are at right now, or potentially just a little bit below. And that does remind me of a tweet that I wanted to share. So tweet from BTC Chris. He says, should I sell my Bitcoin checklist? Did governments enact sound money? Did banksters become honest? Did they find a fatal bug? Did they crack the SHA 256? Did they pay off national debts? Is Bitcoin the only money? If the answer is no, do not sell Bitcoin. So this is something that he makes a lot of good points, but he comes to a very bad conclusion. All of these things are true. These are basically what gives Bitcoin its value. And as long as these things are true, then it's true that Bitcoin has value. But it's not true that you should basically never sell your Bitcoin as long as all of these things are the case. What you should do is stick to your plan. You should be having a plan anytime you get into a trade. If this is your plan, that means your stop loss is 0. Because if something like this happens, then you're probably gonna, maybe you get out before, but basically what this guy's saying is, look, my stop loss is 0, or a fatal bug, which how's that going to affect the price before you're able to get out? So that's something that if that's what this guy's plan was, then great, more power to him. When I first got into Bitcoin, I bought in with a 10-year time horizon. I didn't plan on this becoming my full-time income, my full-time occupation at the time, but I did see this value, and I did want to make a long-term bet. And I wanted to expose some of my net worth to Bitcoin for the next 10 years. So absolutely, I hold Bitcoin that I have not sold, because that was my plan. I got into this knowing that it's parabolic markets that are constantly boom and bust, and I need to be able to hold through a 90% correction. If I'm really wanting to implement a 10-year time horizon, well, then I'm going to have to understand what that means. That means not selling when it goes up a huge amount, and also not selling when it goes down a huge amount. So if you're a hardcore hodler and you have a time horizon of 5 years, 10 years, or even more, then this is fine. Yeah, don't sell your Bitcoin, because your plan was to hold on to your Bitcoin. But what if your plan was to take a stop loss if price broke down 9,000? Like, if that's your plan, should I sell my Bitcoin checklist? Well, number one should be, was my stop loss hit? If your stop loss was hit, then yes, I hate to break it to you, but you need to sell your Bitcoin. If you have no stop loss, then I sure hope you have a very, very small percentage of your net worth exposed to the market. If you've got 1% of your net worth in the market, and you're just like, screw it, the upside's too big, I'm just going to hold on to this. If it goes to 0, fine. If it goes to 1 million, then great. Moons and Lambos for everybody. If that's the case, then fine. If you're managing risk through only exposing a very small percentage of your net worth, then, like I said, more power to you. But if you are not really, if you're having a plan, like you're saying, all right, like for me, for example, I think that it is a very good time to build a very big position somewhere down around these levels. But if I do, I'm going to have an exact area where it's like, okay, I'm wrong. I need to get out, and I need to get out now. And I'm going to know how much I'm risking, predetermined. It'll be predetermined how much I'm risking. And my plan, my checklist will be, should I sell Bitcoin? Well, did it hit my stop loss? And if that's yes, then all right, I'm out. And by doing that, now I can maybe be a little, I won't say less responsible, but a little more aggressive with the amount, the percentage of my net worth that I expose, because I know exactly where I'm wrong, exactly where I'm exiting, exactly how much I am risking. So that's just something that I wanted to cover. He makes a lot of good points, and it's really easy to believe something like this when you're kind of wondering what's going on. Twitter's favorite thing is some sort of bullish, tweet like this, something that just tells you to blindly hold on forever and wait for prices that may or may not ever come. And it's a form of virtue signaling, and these are the things that really get under my skin. So I did want to point this out. You make a lot of good points, but your conclusion, which is basically financial advice, you're telling people what to do with their finances. You're not, suggesting anything. You're saying do not sell Bitcoin. The answer is no, do not sell Bitcoin. Well, that's something to be very careful of, because you need to have your own plan. And if your plan was to, like I say, hold on with no stop loss forever, then he's absolutely right. Don't sell your Bitcoin. Not now, not never. But if you are more active or more savvy with your approach, then I would say that there's only one thing that needs to be on your checklist, and that's, did we hit the stop loss? Okay, see if there's anything else I wanted to cover. One other thing I wanted to bring up that maybe somebody can tell me in the chat, it would be great, is did we enter backwardation on this last move? I was sleeping last night and would have loved to see what the market looked like right around here. If we entered backwardation right in here, that would have been a very, very strong indicator of a local bottom. And as it stands right now, we are not in backwardation. We are in contango. The spread is narrow, which leads me to believe that we may have been in backwardation a few hours before I was able to check. So if anybody was looking back in here, and I am one, I think, newsletter behind Ugly Old Goat, I'll have to see, because that's something that he basically never misses. So, and there may be a chart that I can check. Let me see if I can do that really quickly, which shows the historical. Let's see. Bear with me. So it looks like, so this would be BXBT would have been more expensive. It looks like it might have during that one candle. Looks like it might have, so that would be very interesting to confirm. If there was backwardation right in here, that would be a very strong indicator. Being that it's already gone, maybe it's just wouldn't be that strong. You at least as I understand, want some sort of persistent backwardation, not just for a blink of an eye, but a few hours, few days, few weeks. Okay. So something else to mention real quickly is the volume does not look bullish, at least on the 4-hour. Notice the sell volume that occurred on this candle, where we closed right here, compared to the buy volume that occurred on this run-up. You would want to see this buy volume here to be equal to or greater than this sell volume to believe that that demand is overwhelming supply. Now it could be that there were some orders pulled, and that's not nearly that's not nearly as important as if orders weren't pulled and you broke right through. So either way, that we got this lower volume bar is not a good sign, and tells me that it should be hard to sustain above this area of around 7,093, because it does seem like there's more interest in selling these prices than there is in buying. So something to keep an eye on. One last thing, as I'm watching for this inverse head and shoulders to form, I'm also going to be looking for moving averages on a lower time frame to reverse, and that is what we've gotten out of the 15-minute. So it's going to be important to me if we're able to maintain this golden cross, or if we give it back right away. That would be bad. If we can maintain this golden cross, then it should lead to an inverse head and shoulders on that 4 hour, and it should lead to some more crossing over happening on the 30-minute. Very interesting to see how well that 200 EMA held as resistance on that last move on the 30-minute. I'm going to be watching closely to see if we can maintain this, and if we can, it's going to be really looking like an inverse head and shoulders is ready to form, and that at least a local bottom is in. If we can't, then it's going to start to get a little ugly. So I don't view this as a buying opportunity. I do view this as a place to be taking profit on shorts. The last time I mentioned entering short was, I believe, right up in here. And now I have held through all of this and am finally interested in taking some profit on these shorts, basically in this price range. Once we got this consolidation, it started to really look like, okay, you know, I want to make sure to cover some in case we just go straight up from here, but not cover too much, because I don't want to cut my big winning trades off at the knees. So that is just about everything that I wanted to talk about. Let's see here, one more thing, maybe a couple more things. I do see a tip, oh boy, tip in the chat. So let me take a look at that. 1 second. Let's see if I can get this how I want and get it out of here. All right, that tip was 50 and 200 weekly SMAs from John Smith. Okay, so let's see, and then before that was Fabric King asking to explain backwardation again, and that is a topic that it would probably take at least one podcast in itself to go over. So what I'm going to do is pull up a link to a video where I did describe it. Let's see here. All right, and hopefully this doesn't start playing. It didn't. Good. All right, so just sending a link in the live chat right now for Fabric King's question. Please explain backwardation again. This is something I did go in depth on the 5th part of my BitMEX tutorial. BitMEX tutorial 105 is titled Futures, Hedging, Arbitrage, and the Basis. The basis is what refers to backwardation and futures and the spread between the futures and the spot. So give that a watch if you are wanting to let's see here, learn more about futures and arbitrage. And John Smith, another tip, appreciate it. How do I send bigger than 199 super chat? I really don't know. I've seen others come in bigger, but I've never really looked into how that is done, so I apologize. And you are right, John, that backwardation is when futures are cheaper than spot, and that is a very bullish indicator. Okay, so let's see here. 50 and 200 SMAs on the weekly. Smooth moving average. I just want a simple moving average. Second as I get these loaded. Oh, gosh dang, I keep doing the wrong one, I believe. So this is my 50. Is this supposed to be the 200? good example right here of why I like EMAs. You'll see this happen much more with SMAs, where you get these fake crossovers that lead to nothing and immediately recross. I would bet that the EMAs didn't cross there, and actually I know that they didn't because that's something we just looked at. So good example. Pull up the weekly. Yeah, good question. Yeah, it looks like this 50 is quite important right now. We closed below it for the first time since April. That we have closed below the 50 EMA. We see breaking above seemed to lead to something. Now we are below, and we appear to be turning it into resistance on this current candle. So that's not good. It is still in a bullish angle, so that's good. But yeah, that's definitely, when we close below a 50 EMA, my target becomes the 200, specifically if we can't immediately regain it, like on the following candle or two. That's where I start to look for a return to the 200, which I'm really not looking for at this point, but this could turn out to be much more important than I was originally thinking, this trend line, because there are going to be some big time moving averages coming in right there. And Bitcoin loves to bottom on the 200 week, either EMA or SMA, generally both. So good question. I wish it was more bullish. I wish we were finding support above the 50. So when this happens, kind of what I do to look for confirmation is we have a close below the 50, but it's still angled up. We don't really know if this is a fake out or not. So I will be using another moving average to look for a crossover to confirm. So let me just get that pulled up real quick. So I have added in the 4 SMA, and it's tough to keep going much lower when these are this far spread out. That's bullish, seeing that 4 this far above the 50, and makes me think that if we really are going to break this down, we would have to consolidate sideways for a few weeks. And if we do get back above, watch for this thing to turn into resistance around 8,000. It's angled down sharply. Okay. So I'm just going to get that out of there. Seems like there may have been a couple other questions I'll take a look at. Let's see here. Zach Dems asks, will you show us how Tyler G placed a stop loss? I think he means Tyler J for Jenks, but I kind of like Tyler G. And yeah, he wouldn't use hard stop losses on the books. He would use moving average crossovers. So basically, he would use the 2 EMA, 2 MA, SMA. That was a simple moving average, and price closing below that didn't signal anything, but it did tell him to be on the edge of his seat. If the 2 crossed the 9, the 7, then he would start scaling out, and he would be fully out if the 7 crossed the 30. So he would basically use moving average crossovers to scale in and out of his positions. He wouldn't have hard stop losses on the books, but he would know exactly where his stop losses would occur, and that is very much the foundation of how I trade. And that does lead into another opportunity to shill something that I am very excited about, and that is, I think in the last stream I mentioned that I will be teaching an advanced Consensio course at the upcoming Unconfiscatable conference, and I think that registration is now ready to go. It wasn't last time I talked about it, so that's why I did want to make sure and pull this up today. Just going to tonevase.com and then clicking on Unconfiscatable. I guess you can just pull up that by itself. So let's see here. What do we have? A bunch of very good speakers who I'm excited to see, no doubt about it. And then this is taking a while to load. And here the workshops are. February 20th is, I believe, I'm actually 21st. So you can come click on that. If you do register for this, you do get a free copy of the indicator. The indicator costs $500 a year, and this workshop costs $500. So that will be included, and it does look like registration is available. So if you do register that, just email me the details to emasar@gmail.com, and I will make sure to get you added on. And great question to segue into that, because it is very important to understand that Consensio is a full system that signals the trend, it signals entries, and it signals the stop losses. Okay. Let's see. What's your next target? My next target's the median of that MA, the median of that channel, which I think is around 79 to 8,000. But that's, yeah, we can call that a target, sure. Okay, what would it take for you to consider this the current ultimate low? It wouldn't take a whole lot, to be honest. If we can get back above 86, it's really going to start to look like the bottom is in. You would really need to take out this high to be overly confident one way or the other. But if we got back above 86 and regained these moving averages and caused them to recross, and we've got this broadening bottom pattern, I would have a lot of reason to believe that the bottom is in if we can spend any time back above 86. If we can't, then I will be looking for another leg down. And I'm probably going to have to call it here. Oh, wow. Thank you very much, Fabric King. And thank you, John Smith, for asking how to tip bigger as Fabric King comes in and shares 109 euros. Thank you very much. Much appreciated. And I guess just click on the money and drag the price. So there you go. Definitely appreciate everybody for tuning in. And I think there was just one last thing that I wanted to share. So I did make an update to the description of the YouTube video so that more stuff is here available. I include all the indicators that I put out there. Only one is for a price, and that's EMASAR. Why isn't that a link? Gosh dang it. I'll have to figure that out. That's supposed to be a link. The rest are available for free, Lucid SAR and Peter SAR specifically, along with the strategy testers that go along with that. So here is a list of the indicators that I have available, and did add a new affiliate at a good time. I know most people are set up on TradingView, but maybe some can use a bit of an upgrade or anything along those lines. They are having a Black Friday special. So right now I have this link in here for TradingView. I describe why I use the premium account and provide that link, which will refer people through my account. And then just wanted to pull up, really, it's been showing me these advertisements all day. I think it's 60% off, and I wish I could confirm that. You will have to confirm yourself. But I think for the next few days, it is like 50–60% big discount for Black Friday on TradingView. I definitely plan to renew my subscription in that time. If you can get signed up like a couple of years ago, I did on Black Friday. So now every time I'm ready to renew, it is time to renew during their sales period. So okay, looks like I covered everything that I wanted to, and maybe even a little bit more. So I hope that you guys enjoyed that episode. Like I said, I will be working to get that TradingView group up and running tomorrow. I am very excited about the people that already are interested in joining and have provided their information. I think we're definitely going to have a great group, and then I am going to be definitely making some commitments, dedicating myself to be a very active part of that. And that's one of the main reasons why I've been waiting to establish a group, is I didn't want to establish a group and then not be consistently contributing on a regular basis. So as I get that set up, it will also be coming with some commitments that I will be making to the members to make sure that I am doing everything that I can to provide the not only support for the indicator, but also some educational resources and the most up-to-date analysis that I can at all times. So thank you all for tuning in, smashing those thumbs up, and subscribing is always very much appreciated. And if you leave any comments, that is also appreciated. So thank you guys for tuning in. I will continue to try to do streams as much as I can, specifically when the market is volatile. And so maybe we'll see you tomorrow. Maybe it'll take a few more days. Do have Pool League tomorrow, so it may be a little tricky to get everything done I want and do a stream, and need to get my mind right for going in and drinking some beers and kicking some ass at pool. So all right, thank you guys for tuning in. We will plan on catching up with you later.